One fund on point for today and the expert to talk about it. This is the ETF of the week. Yes, welcome to the ETF of the week, where we examine trending, new, newsworthy, unique, and intriguing exchange-traded funds with Todd Rosenbluth, the head of research at VettaFi. And at VettaFi.com, they've got all the tools and research you need to make yourself a better ETF investor. VettaFi, by the way, is also the organizer of Exchange, the largest ETF conference geared towards financial advisors. And if you're hearing this and you haven't registered, you've got just a little time left because it's being held next week, March 23rd through the 26th in Las Vegas. Stay tuned after Todd and I are done here for a message you can still get in on short notice to Exchange. Todd Rosenbluth, great to chat with you again.
It's great to be back.
Your ETF of the week is
the American Century U.S. Quality Value ETF, VALQ, V-A-L-Q.
VALQ, the American Century U.S. Quality Value ETF. It's an interesting choice, Todd, because it's a fund that has a good track record, but its track record is not, we're killing it in the category. Its track record is more kind of, we're consistent. So is consistency what you're shooting for here? Because that's my take on this fund.
So that's one of the benefits we think of VALQ. So this is a slightly more defensive, slightly more value-oriented core equity position. And because the reason I say that is it's diversified across the sectors, but it's more of the undervalued, higher quality stocks that you would find within many of those sectors. So we've seen a lot of volatility in the market in February and in the beginning of March. We think many investors are looking to still stay in the equity markets, but be able to have a portfolio that can help them sleep at night. So this is not a slow, stodgy portfolio, but by taking valuation and by taking quality into account in the construction of the index, we think that helps. And I want to make sure I get this out early. VettaFi is an index partner with American Century for this. Folks should certainly look at what's inside the portfolio and do their own homework for that. This is a strong ETF to us.
Quality is kind of become everybody's favorite factor. It's supposed to do really well, but I will point out it's still a relatively new factor. And we're starting to get it tested in ways that it hasn't before. Do you think we're going to see any surprises among the quality funds? I mean, not necessarily specific to this one, but as a guy who evaluates ETFs where, quality is now in a lot of fund names, are we going to wind up finding out, whose definition of quality stands up to turbulent markets now?
Well, we certainly are. So quality is one of those phrases that you think you know it before you see it, and then even when you look inside the portfolio, it may surprise you. So let's just give examples of stocks that are inside VALQ. Johnson & Johnson is a top position. Procter & Gamble is a top position. Walmart is a top position. The fund actually has its most exposure to the technology sector, but not Apple and Microsoft and NVIDIA necessarily. IBM, TE Connectivity, Amdocs, those are examples of the technology stocks within the portfolio. So to me, quality is a company that has, or quality company is one that has a strong balance sheet, consistent earnings records. That's part of the criteria that's used here. And then there's a valuation filter that's incorporated into the methodology. But it's important to know what you're getting, because my definition of quality and your definition and someone else's definition might be quite different.
In terms of how this fits in with a portfolio, as much as I love some of the stocks you mentioned, some of which are personal individual holdings in my portfolio, there are also big name companies that are in people's plain vanilla growth funds. And a plain vanilla growth fund is different from a quality fund, only that plain vanilla is not focused on quality or what have you, but they're pretty similar in some cases. So who should be looking at this and who doesn't need this because they've already got these tools in their box?
So I think of this, and I think actually Morningstar thinks of this as a large cap value strategy. Now, some of the stocks are going to tilt a little bit more towards core. Some of the stocks might not be as large a cap. Amdocs is one of those ones that I mentioned earlier, and I know that that's not the same size company as Johnson and Johnson or Procter and Gamble. This can fit into your portfolio as part of your large cap exposure, and it's tilted more towards value. So you mentioned growth earlier. I think people will look inside this portfolio and not see those same growth stocks that they might find within the Qs, for example, that's dominated by NVIDIA. It used to be dominated more by Tesla, which is sold off quite notably. We've seen a rotation in the market for the first part of the year, favoring the value-oriented stocks more than the growth-oriented stocks, and that's helped VALQ to hold up as we're recording this more than the broader marketplace. That doesn't mean we'll always do better than the broader market in times of volatility, but I think of this as a safer way of getting large cap equity exposure.
Does that mean that the money for this fund, if you're adding it to your portfolio, comes from your large cap growth or large cap value or large cap blend to maybe put the more emphasis on playing defense right now?
So I think playing defense makes a lot of sense. We've seen the volatility in the marketplace. There's the old adage of time in the market, not timing the market. And so I'm talking about this as a tactical commentary. But if you are more nervous about if this volatility in the marketplace has made you more nervous and concerned that certain stocks are selling off sharply within your portfolio, and you're not getting that same level of diversification you thought you were getting with a growth-oriented ETF, this can be able to fit in to the portfolio. So what you would sell out of, if you were to sell out of something to put into it, I'll leave that to folks. But this is going to be different than what you probably have more exposure to of the growth side of the ledger. This is a bit more defensive.
Let's talk a little bit about portfolio construction, even if we're not talking about where the money's coming from, which is when you're looking at large cap, et cetera, admittedly, different style boxes, but how many large cap funds would you suggest somebody own before you just have mud? You have a closet index fund or something along those lines, because you bang the drum on active management, which is great, but there's no denying too many funds in any one category. They're just trading with each other and we're paying the freight.
Right. So this is a smart beta index fund, or I would think of more of a factor 2.0, the next wave of these factor-oriented strategies. This is not an active strategy, but I do think you want to make sure that you don't have too many ETFs within your portfolio. We talk week after week, and I've come at you with more than one large cap strategy. You obviously have to pick and choose which of the ETFs that we talk about can make sense. But you probably want to have a large cap growth and perhaps a large cap value oriented ETF to be able to dial up or dial down the growth or the value exposure that you have, or that's if you want to have the ability to dial up growth and value. And so a growth ETF and this can go hand in hand, and you can have an equal weighting. You find yourself with a core, or you can overweight value, which is doing better than growth, or growth, which did better in the past. I don't think you want to weigh down your portfolio with too many different ETFs. Maybe a third large cap ETF is appropriate, but you're going to have some overlap in the construction and what's in the portfolio. This is an ETF that has over 200 positions, I think close to 230 positions. So you're getting that level of diversification with VALQ.
And that's why VALQ, the American Century U.S. Quality Value ETF, is the ETF of the week from Todd Rosenbluth at VettaFi. Todd, great stuff as always. Safe journeys to exchange. We'll talk to you again next week.
Sounds great. Thanks a lot.
The ETF of the week is a joint production of VettaFi and Moneylife with Chuck Jaffe. And I'm Chuck Jaffe, and I'd love it if you check out my weekday podcast at MoneyLifeShow.com or on your favorite podcast app. And if you're looking for your next great mutual funds, you want ETFs, check no further than VettaFi.com. They've got all the tools you need to make yourself a savvier, smarter investor in ETFs. They're on X at Vetta_Fi. Todd Rosenbluth, their head of research, my guest, he's on X too, at Todd Rosenbluth. The ETF of the week is here for you every Thursday. Make sure you don't miss an episode by subscribing or following along on your favorite podcast. We'll see you next week with another ETF to consider. Until then, Happy investing, everybody.
Stuck in the same patterns and routines? Trying to take your practice to the next level? You need to register for the Exchange Conference. In March 2025, industry experts will be gathering in Las Vegas to share actionable information, network, and learn the latest innovations in practice management. Invest in your greatest asset, yourself, by registering at exchangeetf.com today.